What is going on with Adobe stock? It is down more than 8% today. That's after announcing that their revenue grew more than 11%. What gives? Why is the stock tanking and going down so much? That's what I'm going to answer in this video. Taking a look at Adobe and seeing where this company ought to be priced at and sharing with you what I plan to do with this stock. I'm currently a stockholder of Adobe, really believe in the company, but what am I going to do? Am I going to buy more shares, hold, or sell my shares in Adobe? I'll share that with you. Now, Adobe's a really good company. They've been around for a long time, and they're the leader in the creative software space. They have been a dominant force in that space, and I think they're going to continue to do so. But their fourth quarter and the way they've guided, they're saying that their revenue is probably going to be light. And based on their future projections, I expect that it's going to be growing at 9% if you compare the fourth quarter of 2024 to the fourth quarter of 2023. That isn't too bad, but investors really had hoped that they'd continue to grow maybe at 11% or higher. The good news about Adobe is that they are growing their free cash flows, which is always good. Their free cash flow rate is actually accelerating. Very good. Balance sheet is really strong. They have more cash than they do debt. So, very good balance sheet. I'm going to look at their fundamentals and then value the company and share with you what my plan is. Now, let's get into it. Looking at Adobe for the past 5 years, the stock is up 92%. That's a pretty good rate of return. And you can see that the stock's really gone up and gone down. Geez, if you would have bought this before the pandemic and then followed it up, you'd be up very nicely, up 140% in roughly 2 years. It did correct back in the day when 2022, a lot of stocks really corrected. It went down substantially. But since then, like many stocks, it's really risen. So overall, the stock is a good company. They're continuing to grow their business. They're very strong and dominant in their space. Having volatility in a stock is a good thing for an investor because I could pick out points when a company is really unappreciated, heavily discounted, and then this quality company will go up in value. It really follows what I'm looking for, which is measuring the intrinsic value of a company, knowing where that value is, and picking spots where it's a really good buy zone, buying at a really good discount. And then as the company rises to its intrinsic value, it rewards me with a nice return. I think that Adobe is certainly a good candidate for that, especially in the current, sell-off. You're seeing the stock really get sold off quickly. And if it continues to drop, it's really going to drop into that buy zone. This is a large company. It has a market cap of $237 billion. Their revenue is almost 21 billion if we look at the trailing 12 months. The PE is a little high for the current year, but it's going to go down next year to 27. This is a growing software company that has very good margins. So I think the PE is worth it to me. Analysts say it's a buy and it's discounted by 14%. They base their analysis mostly on earnings per share. I'll see where I end up and what my plan is with regard to discount. As mentioned, the company is growing at 11% if you look at their trailing 12 months. That's very good growth. And the company has a lot of green on the screen, growing each year very nicely. When we look at their balance sheet, really strong balance sheet with more cash than debt. The cash flow looks really good. The trailing 12 months is at 6.5 billion, and you're seeing an acceleration of cash flow if you look at the most recent quarter. So I'm going to use my estimate for cash flow, which is using the accelerated cash flow that I'm seeing in the most latest quarter. When I look at the forecast of what analysts think of the company, 29 analysts cover the stock, so it's a very well covered stock. And collectively, they think it's discounted by 14%. If you look at their earnings per share for 2024 is $18.54. It was a 56% growth from the prior year. And next year and the year after should be very good growth rates. So that's very good data that I'm going to put into my valuation. I believe that Adobe is being discounted by 15% if you look at today's stock price. And the way I get there is I look at the free cash flows a company is going to produce in the future, discount those to a net present value in today's value. I also look at earnings per share and value the company based on earnings per share. Starting with free cash flows, I think they're going to do $7.5 billion if you look at the next 12 months. And that's an estimation based on the accelerated free cash flow that I'm seeing, as well as a growth rate of 9%. When I look at years 2, 3, and 4, I'm going to grow my forecast by 9% in those years. And then terminal value years after, years after year 4 are 5%. The discount rate I'll use to discount those free cash flows is 8%, giving me a intrinsic value of the cash flows of $261 billion. The cash on balance sheet is 7.5 billion dollars and the debt is 5.6 billion dollars. So it brings me an equity value of $263 billion. The market cap's $237 billion. So when I get to a per share value, it's $593 per share is the value. The current stock price is $534. So there's a discount of 11% if I look at free cash flows. That's a good discount on a high quality company. Earnings per share look really good. And I'm going to use a PE of 32 because I think they're a growing company, high margins, really quality, and kind of industry that I really like to be an investor in. So I'm going to go 32, grow those earnings per share by 10%. So it really yields a 22% discount using the earnings per share method. I blend the two, but I put more weight in the free cash flow method. So I get to a 15% discount on a high quality company. I think Adobe is a very desirable company. They have software that customers really like to the point where they're really growing their dominance in the creative art market. Having said that, it really enables them to grow their margins by increasing price and really gaining more efficiency. You can't just copy what Adobe provides to the market. Their products are really well appreciated by many people that are current users and current subscribers to their software. So I put them squarely in the green, and it makes it a very desirable company to me. It has very strong moats. Software companies tend to have those moats, which is nobody can just copy their software. They have a strong customer base. They have a network effect where the creative community really depends on Adobe products. So it's very hard to replace them within that community. Having said that, I'm going to be buying more shares of Adobe. A 15% discount is a good discount on a high quality company. So that's my plan on Adobe. I hope you found my analysis interesting and I appreciate you watching.